Alphabet stock is up nearly 50% in the past year. And one of the reasons is that the threat that a lot of the investors thought that they were going to face from artificial intelligence, in particular products like ChatGPT, just really haven't materialized. We have seen over the past 18 months or so that large language models have largely been commoditized in the market. Yes, you can use ChatGPT, but you can also use Gemini or Perplexity or whatever LLM you want, and you're effectively going to get the same answer from a lot of those queries. So a lot of the fear that came around Google's search business has really fallen by the wayside. So investors aren't really worried about that, and that's one of the reasons that the stock has recovered as much as it has. If you just look at the business that we have today, it's not all that bad of a value for a big tech stock and for a company that is established as Google is and the parent company Alphabet is in all of its markets. I'll just give the metrics behind shares right now. Price to sales multiple on a trailing 12-month basis is 6, and the price to earnings multiple is 26.7. So not the cheapest stock, but not the most expensive stock either when you look at the long-term growth trajectory of something like search. And of course, there are products rolled into that like Android, like YouTube, like Gmail, a lot to like in the existing products in the ecosystem. But the one segment that I think investors shouldn't be overlooking right now is Google Cloud. And the reason is it's not only going to augment the existing Google products that we see today, integrating into all of those products that I've already mentioned, just having little artificial intelligence add-ons, but it's going to be the cloud provider for a lot of startups and growth companies in artificial intelligence. The company recently highlighted this in its Google I/O presentation, and what I was most impressed with is this looks a lot like AWS for mobile devices. So I'm going to get into some of the operating trends and what we should be looking for in the Google Cloud in the future. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at the overall numbers for Google Cloud because I think this shows the picture pretty clearly. You can see here that over the past 6 years, revenue at Google Cloud has grown 42% on a compound annual growth basis. So that's a really phenomenal growth number, but the segment has not been profitable until the past year. So this has really been the challenge, is that Google was in many ways a distant third place behind AWS and Azure. And there are a number of reasons for that, but one thing is that this just isn't Google's core business. This isn't what they fundamentally do or what they're built to do. They're built to build technology products and then distribute them at scale. But this is what's changed with artificial intelligence. With artificial intelligence, we're basically starting the clock over again on some of these cloud solutions, because now cloud providers are going to have to provide infrastructure, models, and all the tools that developers are going to need to build the next generation of products. If you go back to the launch of products like Netflix, Dropbox, these were enabled by AWS being an existing product. Snapchat is another example of a company that doesn't get off the ground without AWS. They were built in a world where you could build a business on top of a cloud provider like AWS. And then you had the growth of things like Azure and even Google Cloud after AWS kind of established the market. In artificial intelligence, everybody is trying to grow, trying to provide kind of the same solutions. But where Google has a fundamental advantage is they have their own TPUs that they've been spending over a decade developing internally. They have a massive fleet of NVIDIA GPUs, and they have the infrastructure to serve customers just a little bit better than some of these other cloud providers. And that little bit better is going to be really important for a lot of these artificial intelligence solutions, which are already relatively slow. It takes, a fraction of a second to do a search query. But if you're going to put a question into ChatGPT or Gemini, it's going to take multiple seconds to get an answer. So any fraction of a second you can take out of that is going to be beneficial for your company if you're building artificial intelligence tool. And any fraction of a penny that you can take out is going to be really important as well. That's where the TPUs and the scale that Google Cloud has is going to be really important when comparing to the other cloud providers. And so the upside for Google Cloud is not just building on the business that it has today, it's growing with the startups in artificial intelligence that maybe only have existed for the last few months or maybe won't even exist for the next few years. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Google Cloud CEO Thomas Kurian did an interview with Ben Thompson of Strateq right after last week after Google I/O, and I thought some of the takeaways were really important. So here's a couple of comments that I think that I just wanted to highlight for investors. The first is that Google is just starting to see companies move out of what they call proof of concept into production deployments across different parts of the enterprise. So when you do that, you're not just testing, hey, what sort of products do we want to build, but how do I actually launch them? How do we scale them? And what's the cost going to be? And so what he talked about is once you start considering all of those things, you need to consider what's the cost of your cloud provider, what's the time to run an inference, how is it going to fold into how's it going to fold into my existing tech stack? What's the concentration of data on one of these cloud platforms? So all of these things go in, and he said, we're trying to build an open platform. So they're trying to build artificial intelligence tools that you can pull in data from AWS. You can have it on Google Cloud. But this is going to be a more flexible piece of infrastructure than maybe Google has ever created before. And that, I think, ultimately is going to really bode well for their growth in artificial intelligence. Google also isn't married to a model. Yes, they produce their own models with things like Gemini, but if you want to use an open source model, if you want to bring in another model that's using an API, you can do that on the Google Cloud. And I think that fundamentally is going to be important because it's not going to wall off all kinds of other competitors. We've already seen this be sort of a challenge for Microsoft growing in AI because they've been so tied to OpenAI. So if you're going to compete with OpenAI, do you want to use the same platform as OpenAI is with Microsoft Azure? Maybe it would be better to go with a competitor that's a little bit more open like Google Cloud. The other thing that he talked about was startups using Google Cloud. And I thought this was really encouraging. And again, this is where my comparison to AWS in the late 2000s really comes in. He says that they are doing business with 90% of the unicorns and 60% of AI funded startups. And that is up, what he says is 10 points in the past 8 months. And he took a bit of a shot at Microsoft with this and OpenAI and said, we're not looking to raise $1 trillion to build a supercomputer because we've been building one for 10 years. This is the infrastructure advantage that Google has because it's been building its own infrastructure, not only data centers, but also fiber infrastructure for Google and the search engine for the last decade. And so now they're able to use the infrastructure that they've built and grow on top of that with artificial intelligence, offer some of those services to third parties. And that's fundamentally where they're going to grow in the cloud. So if we go back to this first chart, the opportunity for Google Cloud is not that this is going to be a $33 billion business forever. It's that it's going to be a business that could grow at phenomenal growth rates for the next decade or more. Just running some quick numbers here, if they grow at 25% per year over the next decade, that would be $308 billion in revenue. 30% gets to $456 billion in revenue. These are massively large numbers, but I think they're within the realm of possibility given the potential size of artificial intelligence. The other thing that we haven't seen is this be a significantly profitable business. Right now, the operating margin is hovering right around zero. This should be a business that can generate an operating margin of 25% or more. So profitability is going to follow growth. And this is where I think Alphabet as a stock has really high potential because the core business, I think, is a relatively good value, but the upside is in this phenomenal growth tailwind that we have with the Google Cloud. So don't overlook Google Cloud as the fundamental driver of Alphabet as a stock going forward, very much in the same way that AWS was actually the driver of Amazon stock over the last 10 to 15 years. What are your thoughts on the future of Google Cloud? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.